All right, thank you for tuning in to Niaga AWANI. Looking back at 2024, we witnessed as a dynamic year shaped by global monetary tightening, inflationary pressures and also a steady post-pandemic recovery. So as we step into New Year 2025, Bank Negara Malaysia's OPR decision will undoubtedly play a pivotal role in shaping the economic outlook from household spending to business investments and also market performance. So to discuss further on this, we have the right authority to speak, which is Dr. Rosnani Rasul, the Chief Executive Officer BIMB Securities Sdn Bhd on the line. Good morning, Doctor.
Good morning. Happy New Year to everyone.
Happy New Year to you. All right, today I'd like to delve into your thoughts on Malaysia's OPR trajectory for 2025. And let's start by setting the stage with a look at the overall economic outlook. And perhaps we can also do a little reflect on last year, 2024. We saw a delicate balancing act by Bank Negara Malaysia to support growth while managing inflation. So moving into 2025, what economic conditions or signals do you believe will have the greatest influence on the central bank's OPR decisions, Doctor?
Okay, good morning everyone. Assalamualaikum warahmatullahi wabarakatuh. Overall, I would like to congratulate the government and Bank Negara for a very good growth engine for the country last year. As we know, fourth quarter GDP clocked in at 4.2%, second quarter at 5.7%, and then third quarter at 5.2%. So the fourth quarter GDP will be announced on the 14th of February. We think that is going to be another good number, a good growth, growth momentum for the country, bringing the average for the full year at about 5%. This is in line with the expectation of the government, which expect the growth to be in the range of 4.8 to 5.2%. Though I'm not surprised if the growth number in the fourth quarter touch 5% and then reach the the higher end of the target of the government. Now, in line with that, for the OPR. Now, OPR, there are 6 times of monetary policy meeting for the year. The first one we kick off in January. The expectation is that we believe that OPR will remain at 3%. Now, previously, OPR, the neutral level pre-COVID was at 3.25. Currently, post-COVID, we think that there's still structural improvement needed by the government to recover fully from COVID-19. We think that the OPR will remain steady at 3% for the rest of the year. Now, how the basis of that is that now we look at the inflation for the country. Inflation for the country for November, it came in at 1.8%, pushing for the full year average about close to 2%. So that is very moderate, and we don't see the sign of push inflation, meaning the the domestic price increases is largely contained. Additionally, we don't foresee the asset overheating that could lead to financial imbalance of the economy that could push Bank Negara to actually tighten slightly the OPR to 3.25 or even 3.5. So having said that, we foresee that the Bank Negara will put the growth objective ahead of inflation, because inflation remain contained at about 2% this year. Having said that, if I may, the only risk that we see is actually the subsidy rationalization that may take place in the second half of the year that could push inflation slightly higher. But then again, we will wait for the method, the framework that they are going to implement this. Then only we will be able to see the momentum of inflation for the rest of the year. So far, we in Bank Islam, we foresee the inflation will remain about 2.7%. That is even after taking into account the subsidy rationalization that could take place in July or in the second half of the year. Inflation may reach the peak of 3.5%, the low of about 2% plus, but on average it's about 2.7%. That is actually still the average for 50 years for Malaysian CPI is about 3.3, 3.5%. So we think that is still manageable for the economy. But then again, this may not warrant for the monetary policy intervention by Bank Negara for this year.
Wait, Doctor, I want to touch a bit on the forecast or outlook that was announced earlier by Bank Negara. Maybe little impact. How do you foresee the potential reduction of the OPR to around 2.75%, affecting Malaysia's economic growth and inflation rates in 2025? And on the other hand, what are the potential risks associated with maintaining the OPR at 3% throughout 2025, and how can the risks be mitigated?
Currently, we do not see the growth risk for Malaysia. Yeah, the risks are quite balanced. Upside risk and downside risk for that matter. Though there are a few geopolitical tension here and there, but so far the impact is quite contained. We are largely mitigated by the fact that it's not really a global crisis. So the downside risk to cutting OPR to 2.75%, the prospect is quite low. However, even if you want to increase or tighten the OPR to 3.225, that could happen only if there is what they call demand pull inflation. Demand pull inflation meaning what they call the demand the demand is so much because of the full employment and also what they call the economy is overheating. Economy overheating could be above 5.5% or above 6%. If you look at private consumption, if private consumption reaching about 7 to 8%, then Bank Negara may step in to actually tighten the OPR at 3.25. However, if OPR is being cut to 2.75, that could actually encourage what they call speculative activity. Speculative activity could come in the form of stock market, could come in the form of property market. So I think Bank Negara would have to balance between what they call the risk of actually what they call if they cut the OPR to 2.75, growth could be so high, so good. However, there could be other danger for the economy, like I mentioned just now. However, if there is a need to actually tighten the OPR at 3.25, that could actually choke growth at a time when we are still recovering from the after effects of COVID-19.
Doctor, considering the global monetary easing cycle, in your opinion, how might international economic trends influence Bank Negara BNM's decision on the OPR? And in your opinion as well, which sectors of the Malaysian economy do you anticipate will be most impacted by changes in the OPR, and how should these sectors prepare for potential rate adjustments in the future?
Bank Negara does not what they call base their decision based on the externalities. Yeah, the monetary development externally. They have two objectives. We have to remember two objectives of Bank Negara. One is actually growth objective and also inflation. There could be some movement, some development externally. There could be some impact of that. The impact. For example, the cut in federal fund rate or the increase in federal fund rate could have an impact or bearing on the ringgit. But then again, Bank Negara has made it very clear that the objective of the central bank is actually to protect the growth potential of Malaysia. So, despite there could be some monetary easing in advanced economy, that would not take into account the policy decision by Bank Negara. So, other than that, if they say what they call there is an adjustment of OPR, definitely there are certain sectors will be impacted. For example, as I mentioned just now, if there is a monetary policy easing, that could actually give property market the much needed push that would make their sector what you call very encouraging again. However, if you increase the OPR 3 to 3.25, that could actually have an impact on the banking sector, as the financing rate may increase and therefore direct impact on the loan growth and the financing sector or banking sector as a whole. So there is a pros and cons, a ramification, implication if there is a cut or if there is an increase in the OPR. However, we think that the recent meeting of OPR that was held in November, that was the ninth time that Bank Negara has maintained the OPR at 3%. So we do not see any what you call push or pull factor for Bank Negara to make an adjustment. I think OPR will remain steady. Barring unforeseen circumstances, for example, the war in the Middle East intensified, or if there is a trade war we know that President Trump, the 47th US president, will take his oath very soon, 22nd of January. So he could have some sweeping changes he could be making on his economic policy. So that could have an impact to us as an open economy and one of the emerging economies. So we would have to wait and see. But suffice to say that we think that in the first quarter, there will be two policy meetings by Bank Negara, which is in January and in March. We think that OPR will remain steady. However, for the rest of the year, that depends on the development, on the external development.
Dr. Inflation was a key concern in last year, 2024, though we noticed some easing towards a year end. So in your view, should the 2025 OPR strategy lean more towards inflation control or growth stimulation, given the current economic trajectory right now?
At the moment, we think that what's more important is actually the growth trajectory of the government, of the country. Inflation so far is not an issue. But then again, even if there is a subsidy rationalization in the second half, that actually does not really warrant an intervention so much, because we think that the impact could be contained, because the government has given their commitment that if any subsidy rationalization involving petrol, which is around 85% of the population will not be impacted by that. Therefore, that's why we maintain the view that inflation will remain contained, may not exceed 3.5%, depending, however, still on the government mechanism on how they are going to implement this. Will that be total refloating, complete refloating of around 95? Will there be in stages? So at this stage, it remains speculative. However, we think that the adjustment or reflotation around 95 is best being done at one go, so that the impact to the economy will be only one-off. It will not have any successive or ripple effect to the economy if, let's say, around 95 is being adjusted in stages.
And a little bit on ringgit stability. The ringgit stability has been a critical factor for Malaysia's economic resilience, especially in 2024. So looking ahead, how can OPR decisions contribute to ringgit stability in 2025? And what additional measures should Bank Negara Malaysia consider as well?
Ringgit, Bank Negara does not really take into consideration the OPR if based on ringgit. Ringgit is actually, we are an open economy. We are an open economy, meaning we allow the supply and demand to determine the ringgit level. So even if we adjust the OPR, for example, for another 3.25%, however, there is about 25 basis points. However, if considering the fact that federal fund rate currently is about, they have another 50 basis points to be adjusted this year and next year, any central bank will not be able to to contain the impact of federal fund rate, the movement in federal fund rate, because of the large differential between, for example, Malaysian OPR and also federal fund rate. So therefore, we think that ringgit will remain influenced not by OPR but by supply and demand. Having said that, what's more important to Bank Negara is actually the stability of ringgit. It's very important to see that the volatility of ringgit is being managed very well, so that it will not pose any adverse impact to the export sector, because they base their pricing in dollar, for example. So I think the role of Bank Negara is actually to manage the volatility of ringgit so that it will not be too sharp, their daily movement. However, even if, as I mentioned, Bank Negara opt to make an adjustment in OPR, it will not have that large of impact to ringgit because of the large interest rate differential between federal fund rate and also OPR.
All right, I would like to say thank you so much to Dr. Rosnani Rasul from BIMB Securities Bhd, because as we reflect on Malaysia's economic path forward, your insights will be invaluable in understanding how we navigate these challenges and also opportunities. So again, thank you for sharing your expertise, and you can find this whole discussion on all of our social media platforms, and that includes astro.awani.com. Thank you so much.